huge volatility today in a number of markets. All of those markets, by the way, had that volatility because of the dates of November 3rd and November 4th, which are, under the current conditions, are associated with large volatility. And so if you look at almost any market, you see large volatility in today's session. Here's gold reversing hard here. Here's bond market reversing hard off of yesterday's lows. Here's soybeans having a tank low. We were short soybeans yesterday from roughly $12.34 for a forecast decline, and so on. Big moves across a wide variety of markets under November 3rd and November 4th, which is something that I refer to as a volatility cycle. When you think of cycles, it's very natural to think in terms of repeating orderly cycles, and there's nothing wrong with that. It's just that it's a little more complex than just saying every X number of days something happens. And volatility isn't something that is exactly the same thing as forecasting a turning point or something like that in the market. We're really forecasting a character of the market, because volatility characterizes a market. If it's very low volatility, it's very quiet. And that's what characterizes it. If it's very, very large volatility, that's also characterizes it. So when we're forecasting when volatility is going to come into the market, it's different than forecasting time. And it's not really by simply saying volatility was here, X number of days ago, and now it'll just magically be here again. But in this case, we had two very important factors for volatility. One of them was the normal, what we refer to as a volatility cycle, and the other was actually related to the fact that almost every market that we follow, 8 or 10 or 12 markets, had November 3rd and 4th as really important dates. And when uncorrelated markets are showing the same indication, you're going to get big moves in most all of those markets, and that's exactly what we're seeing. For the first time today, I gave out the forecast. If we do close substantially, somebody had asked today, hey, if we close this year like where we are now, way, way, way above 43.70, what's the forecast? And I gave it to them, and exactly what price we would be at and when we would be there. And it's a lot nearer in time than the forecast for the decline if we closed below 43.70, which it goes all the way out into the first 6 months of 2024. This is much, much closer. It has to do with the first 6 months of next year. That's the timing. But I'm going to leave the price for those who are subscribers and so on, so that they get their value out of that. But it's really interesting. I want to, again, show you the 6-month chart so you can see. Let's get over to the S&P, because that's what we're talking about. This is the 6-month chart right now. So yeah, they're just running them. This is just a really beautiful continuation advance. This was 2020. This was 2020, the second half. This is the first half of this year. This is the second half. This is 2 full years of price movement to the upside. And you're seeing it accelerate from down here. These were 6-month periods, but they were smaller, smaller, smaller. Now each 6-month period is gulping down huge amounts of price real estate. So really remarkable piece of work, something you're not going to see every day, that's for sure. If the year were to close below 43.70, that by itself, without any other indications, would indicate a semi-annual period decline into 2024 that would head down to really quite a bit lower, into the 3,800s, the 3,700s. But if we do close the year anywhere near where we are now, I mean, this far away, 300 points higher, it probably has some further meaning for further advance. Ed says, has anything happened to this point in the S&P that would concern you about the weekly top breaking out instead of reversing down. I came in today thinking just that, but when I look at the weekly chart, it is a really strong weekly move. I'm sorry, let me get over to the S&P here. And it isn't, no, we're not there yet. We're not able to say, no, this just means it's just going to go straight up. Remember, markets are very non-intuitive. So the fact that they're moving up right now makes it very difficult for people to believe that they're not going to see more moving up, right? I mean, this is just how our minds work. On a certain level, the human psychology that creates price movement, if you think of it in those terms, that same human psychology has a great deal of difficulty working with the price movement that it creates. So, and that means that the markets are very non-intuitive. So no, I'm not ready to say, did I have some doubt? Yeah, I did for a minute have some doubt. But when I looked at the weekly chart, I'm pretty good with the idea that we still have a 1 week late weekly top. And listen, I'm going to be the first one to tell you as soon as I know for sure that they are walking through a weekly top. We don't have that yet. And I don't mind telling you that next week, no matter what we do, we have to close below this week's high. Whatever this week's high is ultimately into tomorrow and all that, we have to close below it. And no, we have not taken the weekly top off the table by any stretch right now. But I agree with you. You get some doubts, and I checked, and I have no reason to think that it is off the table yet.